ever ask yourself, how do I get credit? Welcome to Your Clear Thinking. I'm Roderick Mitchell, author of Credit Straight Talk, Clarity on the Conspiracy. This video is part of a series of videos designed to help you build a solid credit foundation. This video is about the decision to get credit. I like to call it the decision in a decision. The initial decision is that you need credit, and the inside decision is where will you get that credit. The choices for credit are local financial institutions, which are credit unions and finance companies, and national credit merchants, which are jewelry and furniture stores, home improvement centers, and department stores, to name a few. National credit merchants offer several credit options to you. They offer 90 days, same as cash, layaway plans, and credit cards. National merchants' credit cards often have higher finance charges and stricter payment terms than local financial institutions. Their cards usually start with a lower credit limit that will increase after a specific number of payments are made. Next is the 90 days, same as cash, which is an agreement that allows you to make a purchase without interest or fees if the entire balance is paid within 90 days. This agreement looks good to many people seeking credit, especially if you've had some credit issues. The reality is the purchase usually ends with you making a regrettable decision. Because if there is no big increase in income, the money is not there for the purchase. Statistically, 80% of consumers who enter into a 90 days same as cash agreement do not complete it successfully. If the agreed amount is not paid in full within that 90 days, there's an extremely high interest rate, and it's usually between 28 to 32%, and it will be added to the entire principal balance from day one all the way until you pay that agreement in full. Now, another credit building program used by local and national credit merchants is the Layaway Plan. This plan allows you to make a deposit on your purchase and a series of payments until the balance is paid in full. Once completed, the transaction is reported as a successful credit purchase to the credit bureau. Now I will talk about local financial institutions, banks, credit unions, and finance companies. Banks and credit unions are considered traditional financial institutions. Finance companies are not. Traditional financial institutions have a wide range of financial services. They offer both long-term and short-term loans. Their goal is to be your financial vehicle for life and handle all financial related decisions now and in the future. Some of the services they offer are mortgages, education and personal loans, investments, savings and retirement accounts, credit cards, checking accounts. Most banks and credit unions offer a checking and savings account at no cost to invite you to bank with them. Maintaining that checking and savings account in good standing ahead of needing credit is a good idea to demonstrate your financial and personal responsibility. Over a period of time, you will build a personal relationship and become a preferred customer. The advantage of being a preferred customer is that you are given complimentary free services for keeping your account in good standing. The services that are usually given are overdraft protection, free checks, and no-fee ATM card. and fast loan process. Overdraft protection is a short-term loan used to cover purchases when your account balance is less than the purchase amount that you are making. And it gives you a chance to cover it without penalty the next business day. Free checks are provided as long as you reorder from that institution. No fee ATM card allows you to use out-of-network ATM machine without paying a fee, like at your local convenience store or service station. Fast loan processing because they already have most of your financial information and history on file. The other local financial institution is a finance company. They mostly offer short-term loans and have stricter terms and higher finance charges than banks or credit unions, and may even require cosigner. And their initial credit limit is usually low, and it increases after a specific number of on-time payments have been made successful. When they give you the higher credit limit, it is common that you will also get a lower annual percentage rate finance charge, either one, whatever you want to call it. And before I mention short-term and long-term loans. Short-term loans are usually 7 years or less. Long-term loans are 8 years or more, up to even 30 years. Now, here are my pros and cons of local financial institutions and national credit merchants. Local banks and credit unions offer free checking and savings accounts that can be used as an entry point into the banking system. Checking accounts maintained in good standing can qualify you to be a preferred customer and get free complimentary service. Local bank and credit unions' credit cards are usually accepted anywhere credit cards are accepted worldwide, and usually have a lower interest rate than national credit merchants. Another one of the pros of local banks and credit unions is the personal relationship that develops over a period of time from you doing regular business and making repeated visits. Because the relationship works in your favor, because it is not easy to deny a person their request if you know them personally. I prefer local banks and credit unions because of the personal relationship. In this video, I talk to you about the decision to get credit and the possible sources to get that credit. I explain the difference between local financial institutions and national credit merchants and their different programs to offer credit to you. I gave you my pros and my cons of the two credit sources. In the next video in this series is how do I get started with the credit application process. Remember to subscribe below and check out the entire playlist in this series. My name is Roderick Mitchell, author of Credit Straight Talk, Clarity on the Conspiracy. And remember, together we ride. Visit my blog, yourclearthinking.com,